Welcome back. Hope you are doing well. Today we have a lecture 8 of ICT A to Z beginner series. In today's lecture, I'm going to show you what is the fair value gap and inversion fair value gap. If you are new to our channel, make sure you watch the previous videos, previous lectures on my YouTube channel before you watch this video, so you did not confuse on this video. I already make a playlist on ICT A to Z beginner series. Okay, so let's get started. So what is the fair value gap? First I will show you the fair value gap, then I will show you the inversion fair value gap. A fair value gap is also called an imbalance that occur in the market on the price action. When the price is running randomly or price running a fast to one way, then it's make a huge candles that create a huge imbalance between the candlesticks. Okay, so here is the first candle. Okay, and let's say you have wick here as well. Okay, whatever, you have wick here as well, and in this candle also you have a wick. Okay, this candle open here, and we have a wick here, and we have a wick here. Okay, sorry for the drawing. Okay, so this is the candle. We are in the bearish trend. Okay, so the candle close here, and this is the wick, and the next candle open and close, then the third candle close downside. As you see in here, the first candle, the wick bottom point, okay, and the third candle, not the second candle, the third candle, wick of the upside or body of the upside. Okay, if there was a no wick, then you will count the body. Okay, so the wick and this wick, if it's not overlapping, if there is a gap like this, it's called a fair value gap. Okay, which will you mark like this. So what happened in this fair value gap? Many of the time when price pull back, okay, then it will give you a reaction to the downside or upside as per your bias. Okay, so I will also show you the example in the live chart, so don't worry, I am just showing you some little introduction before I jump into the real chart. Okay, so what is the inversion fair value gap? Okay, so for example, what happened basically, I will tell you. To validate the inversion fair value gap, what happened basically, that this is the fair value gap. Okay, so as per ICT, if its fair value gap broken, okay, and the candle close above this fair value gap and then again retest this fair value gap, is become as inversion fair value gap. What does it mean by that? Let's say the trend was the bearish, okay, then a huge bullish candle open, okay, and it's close above side of this fair value gap. Okay, so where was the fair value gap? This was the fair value gap. Okay, so these fair value gap now become a inversion fair value gap. It's mean that the trend is changed. Now price whenever retest this inversion fair value gap, then it will go to that direction. So in market you will see many times this thing, but not always use this, because I already told you in the previous video that everything happen, every setup was happen when the price tap on some sort of POI, some sort of order block, some sort of mitigation block, some sort of breaker block or whatever. Okay, so once price tap on some sort of order block, POI, resistance, and you see these type of scenarios, then you're going to start the trading. As I mentioned you in the before, order block, breaker block, mitigation block, now fair value gap, inversion fair value gap. This is also a setup. Okay, now already you see how many type of setups are there, so you don't are going to use all of one, you use only one and practice on it every day, every time, and you will see that these things happen on the market every day. Okay, now let me show you some examples on the chart. So we are on the gold. Okay, we have a 5 minute. You can put anywhere. Okay, anytime, no issue. So we have this Asian session, we have this London session, we have this New York session. Okay, so if you see ICT kills-on hour start 3 a.m. okay, of New York time, right? So we basically, what I told you, and also ICT what said, you will find setup or you will watch the screen on these kills-on hours. Okay, so as you see, price come to where many SMT trader waiting for this order block, right? They are right on some way, but the price did not reach in at least 2 days. Okay, not reach on this level. Okay, so price, where can it possibly can reach in the fair value gap? So what is the fair value gap? We have how many fair value gap from this leg to this leg? We have fair value gap number 1. Okay, we have a fair value gap number 2. Okay, we have a fair value gap number 3 here. Okay, so which one we are going to use? Okay, what ICT said? ICT said if you found these type of situations, then you will use a first one. Okay, this one. Okay, this one. But your money management and your risk management should allow that the price, if come here, then you can still are risk in your risk management level. Okay, I mean that price can come to this fair value gap as well, price can come to this fair value gap as well. But if price broke this one, the setup was invalid, that's all. Okay, so price can come here, price can come here, price can come here. As you see, this is the fair value gap, price just touch on the second one here, and then price fly to the upside. Okay, here as well, as you seen, we have this fair value gap. Okay, so if you are fair value gap trader, where your stop loss should be? Okay, so for this fair value gap, how many candles make it? Okay, if we have a here fair value gap, here fair value gap, here fair value gap. So the first candle, the black one, green and green, these 3 candle create this fair value gap, right? Okay, so your stop loss is downside of this candle. Okay, let me show you some another example in AC session. You see price break, come to this fair value gap and go to the upside, opposite side of the liquidity. Okay, now let me show you some inversion fair value gap on a kill zone hours. You see here, this is the London, okay, 8 o'clock, sorry, New York session, 8 o'clock open. You see a huge fair value gap create here, right? Price did not respect this fair value gap and broke through to this candle. You see this candle, once price do like this, you will mark these throughout, and you will see when price touch this area, then you will short. So where you will be stop loss? Okay, I will show you. This first candle, second candle and third candle, this create a fair value gap, right? So your stop loss will be on the third candle top. Okay, or for you more safe, you put here, you can put here. Okay, so here are your the trade. Fair value gap in kill zone hours. Okay, fair value gap, this was the trade that I took personally. I also share on my Telegram channel. If you want to see, you can go and join our free channel, okay, where I took a trade on these as well, on the base of this fair value gap. Why? Because there was a market structure shift, price also already took the liquidity of the Asian session. This is the many thing that I will going to show you in coming videos. Okay, so in today's video you learn what is a fair value gap and what is the inversion fair value gap. You will more learn, you will going to more learn in coming videos. Okay, So the last example of fair value gap, okay, this was the 20 February, and you see here was a fair value gap. So when price tap, what is the time? Tell me. 1 p.m. Did not I tell you you can trade 130? You see price come 130. You see where it's come. Price run by algorithm. Liquidity relative equals, okay, here, see, that's it. You only need an imbalance, you only need liquidity. Many times you will see price react on your fair value gaps. Many times you see how many days price come, touch, go, touch, go, touch, go. That's the value of a higher time frame fair value gap. Whenever you see price reach to some sort of fair value gap, you see some sort of reaction. That's it. Okay. So when the fair value gap is valid when it's tap on some sort of POI. Understand? I hope you learned something from this video. Make sure you subscribe our channel. Until next time, be safe.